and irrespective of crude prices, it will keep moving. However, from the energy security perspective, for more geographies which are getting impacted by higher crude prices, we will see far more momentum in this direction. So energy security, along with the green revolution or the renewable energies, both the factors put together, is going to drive the market towards the higher trajectory.
So, sir, why is our guidance for order inflow so tepid? It's only like 8,000 crores. I know that it is ex-Reliance and Nigeria, but it's still looking very tepid because fact remains that we are almost the only player or one of two players who can do 1 GW projects in India. So, any comments on that?
So, we want to be like, frankly speaking, we have been very conservative whenever we are giving guidance, and that is based on 8,000 crores we have guided. So, whatever the current bids are there, but we are expecting to beat this number. So, this is the guidance for the time being from our side.
Secondly, sir, there are now some players, who are having the ambition to, go above 1 GW also. So are we seeing any kind of pressure on, our personnel being poached or, some attrition? Because we did see some announcements during this quarter, the last quarter, on, our one or two resignations at our end, and also we are, hiring some more people for the Kutch projects.
Yeah, so we have a very robust leadership pipeline, and our execution and engineering staff continues to be very, very strong. So as far as manpower and organizational stability is concerned, we don't see any threat or any pressure on that side. So we have well-placed mechanisms in place with respect to the supplementing and developing manpower to carry out the volume of work and the growth path or the growth projections we have. So there is no concerns at all on that front. We are fully geared up. And our system, so based on our projections, we keep adding and keep developing the organization accordingly. So we are pretty well placed on that particular front.
So, sir, just as a vision, and I will not hold you to that on any kind of figures, but what do you see could be a potential revenue that Sterling Wilson could be having 3 to 4 years down the line?
We can, conservatively again, we can expect a growth of 15 to 20% on CAGR basis every year. This is the guidance we have given for the revenue as well as the order book this year. And on that basis, we can expect. But we are growing to see the market expansion significantly in coming years.
So, this is
what Amit is alluding to is without Nigeria and Reliance, sir.
Yeah.
Okay. So 15-20% CAGR for next 3 to 4 years, provided we do not get any orders from Reliance and Nigeria.
Yeah,
that's put it so negatively. It is just putting a positive statement of fact here.
Yeah. No, I understood. And secondly, sir, is there any progress on this battery storage and any R&D that we are doing, or we have any kind of inputs from the Reliance side on how to execute these projects?
So actually the company already has capability to execute EPC project for battery energy storage systems. We have executed similar projects in Africa, and we were bidding for these projects in multiple geographies. And we expect this market to come up significantly in India, for which which has not been factored into our projections so far. We expect this market to grow significantly, and we have in-house capabilities to address this market. So because we started working many years back on this particular best part, and we are technology agnostic, and we can address best projects, including any technology in any geography, so we are fully geared up for that.
And sir, we will remain negative working capital for even this 15-20% growth next 3-4 years? Or we may need more infusion of funds through equity?
Business model will remain same. We are going to be asset light and negative working capital requirements.
And definitely no equity additions.
Pardon? I think just missed that question.
Sorry to interrupt, sir. May I request you to rejoin the queue for follow-up questions, please?
Yeah, sure. Thank you so much.
Thank you, sir. The next question. Before we take the next question, A reminder to all participants, in the interest of time and fairness to all participants, may we request you to limit your questions to one or two per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. The next question is from the line of Puneet from HSBC. Please go ahead.
Yeah, thank you so much. Apologies, I joined a bit late. Is there any indication from Reliance as to when the work will start flowing to you? And will you be the sole executioner for those projects?
So I think I have already answered that question in the beginning of the call, that discussions are going on with Reliance, and we remain the front runner for the execution of the portfolio. If not, no, and we expect the significant portion of the complete rollout to be done by Sterling Wilson. We are looking for EPC, and work should start soon.
Okay. And would you also be executing wind for them?
Pardon?
Would you also be executing wind projects for them?
Yeah, so all the options are under discussion, and as and when we finalize, we'll intimate you around that.
Okay, understood. My second question is if you can talk about, availability of modules, given that ALMM is now in place. Is there any risk to execution or pace of execution, given that there could potentially be shortage of capacity on the module side? Or are you well placed?
No. Because significant capacity addition is happening in India, and I don't see any challenge on that particular front with respect to EPC rollouts, because whatever orders in hand, all the developers have secured modules, even PSUs have secured modules. So I don't have any concern, or I don't see any impact coming on our execution portfolio.
Understood. That's very helpful. Thank you so much.
Thank you. The next question is from the line of Nikhil Abhyankar from ICICI Securities. Please go ahead.
Hi, sir. I got dropped from the call earlier. I'm not sure whether you've answered this question. So, sir, what portion of our current 30 gigawatt of pipeline is hybrid projects?
Which project?
Hybrid projects.
Hybrid projects. So hybrid projects, right now I will not put a number to that, but we'll see that particular portfolio growing in coming year.
So right now there is no number. It is not included in the pipeline.
Right now it's part of the pipeline, but I would say, I would not like to put a number, because developers are also taking call on various factors, how much wind, how much battery. So based on the various configuration, that number keeps changing. So that's why we have not put a number to that.
Sure. And also, sir, are we also looking to get into pure wind EPC, because some of the OEMs are sticking to more of a equipment supply approach only. So is there an opportunity which you are seeing and which we can look at?
So we will do wind without land, and of course, the OEM will be supplying the equipment, but we will not be taking any responsibility for the land, which is rare. So we'll be going only and only where the land risk is not in our portfolio.
Okay, the land is not in it. So will we be bidding in the PSU bids, something like NTPC or someone?
So all the PSU bids we take call from case to case basis. So how is our competitiveness and how well we are placed, and whether all the risk matrices are getting complied to, and then accordingly we decide for every bid. So this is decided on bid to bid.
Okay. And so just a clarity on the revenue guidance that you gave earlier. So you mentioned that out of the 8,000 crore order book that we have, around 60 to 70 will get executed this year. Am I right?
No, not 60 to 70, 6 to 7,000 crores from the unexecuted order book will be executed this year. We are expecting to book 8,000 crores of orders this year, out of which 22 to 30%, 25 to 30% will be converted into revenue, and all the numbers are excluding Reliance and Nigeria.
Okay. So without Reliance and Nigeria, around 90 to 95 billion of revenue guidance for next year.
Yeah. So, but whatever you use, I am not putting a hard number to it, but I have given you the broad range.
Sure, sir. No problem. Thanks you and all the best.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, Please limit your questions to one or two per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Aejas Lakhani from Unifi Capital. Please go ahead.
Yeah. Hi, team. Thanks for the opportunity and congratulations. Could you specifically speak about the receivables, the surety bonds that had got enforced by the contractor, the invocation of those bank guarantees of about 400 crores, the litigations that were going on, and could you specifically state where we are in that journey?
All of those items are presently lying as current assets. The management has taken legal views or expert views to determine whether there is any provision required, and the decision was there is presently no provision that is required against each of those matters.
Okay, but could you tell me what is the update in the courts, because you're fighting this battle in the courts? Has there been a hearing? When is it likely? When can we expect the fructification of this? By what timelines?
Amit, would you like to take this question since you're handling this frankly?
Yeah. So as far as the timelines are concerned, so we are expecting, because the legal process is always a lengthy process. So some of the cases are coming up for hearing in second and third quarter, and some are coming in the Q4. So that's how it is panning out. But there are always development and there can be some delays with respect to that. But as Bahadur alluded to earlier, we have consulted or hired law firms, most reputed law firms, international law firms for all our cases. We have taken opinion of legal and technical experts, and we are very, I think, favorably placed in all those litigations.
Okay. The next question is, earlier participant had asked about the need for maybe another fundraise in the next year. Your thoughts on that? And if you could just provide some clarity that when Nigeria comes through, because you stated that you're confident, how should we understand, the order booking in that, the conversion to revenue, the timelines associated, the cost, the scope of work? If you could just give some more understanding of that.
As far as the fundraise is concerned, we do not see any need for any fundraise. Working capital is negative. Operations are profitable. There is cash flow from operations if you see the cash flow that we have presented. So we do not see any need for a fundraise. As far as Nigeria, I think Mr. Amit has already answered the question. But in case, Amit, you want to just follow up anything a little bit.
No. So as Bahadur has alluded, we have already answered the question that we are working very closely with Nigerian authorities. Very positive developments have taken place in last few weeks, and we are expecting it to conclude it very soon.
Okay. Could you quantify that over what period, because the timelines have moved? So over what period will we execute this? Will it be still, spread out over 2 years? What will be the quantum that we may get in the first year, second year? Could you give some more color on that?
We will give color once the order is finalized. As of right now, it was a 2-year project. It continues to remain so.
Okay, thanks and all the best.
Thank you. The next question is from the line of Subhash from Value Investments. Please go ahead.
Hello, sir. Thank you for the opportunity, and also congrats on the good numbers. So my first question is about, you mentioned that there would be an upgrade, right, on your rating upgrade.
Sorry,
after the rating,
I request you to use your handset, sir. There's slight disturbance from your line.
Okay, one second. Are you able to hear me now?
Yes, sir. Please go ahead.
Okay, so you mentioned about the ratings upgrade happening soon, right? So I wanted to know, after the ratings upgrade, I think there will be no need to pledge the shares, right, the promoter shares, because in the last quarter, to get some loans from the banks for the projects, I think there was some pledge.
Firstly, that is incorrect. there are no shares of the promoters that have been pledged to take any loans from the banks in the last quarter pertaining to this company. In fact, in the last quarter after the QIP, we have gone and reduced debt. The rating upgrade is expected shortly, and as soon as it is there, we will make the announcement to the stock exchanges.
Okay, sir. And also on the segmental revenue, I see you have EPC business and also the O&M, the operation and maintenance. So do you have any plans to build your IPP portfolio, like individual power producing?
I will start off. We are not developers, so we are essentially in the space of EPC, whether it is EPC for solar, EPC for a hybrid project, and O&M. We have no plans to be an IPP.
Got it. Thank you so much. And also my last question would be on the conversion of revenue on your order book. So you mentioned that 25 to 30% of the 8,000 crore will be converted to revenue. So do you mean that is only for FY25? I could not understand clearly. Could you please explain what is the conversion of revenue?
So let me correct you on that one. On the revenue conversion part, so there are two parts. I will state again. One is the unexecuted order book value, which is like 8,000 crore is our UOV. Out of that, 6,000 to 7,000 crores will be converted into revenue. The fresh order inflows, which we are expecting to the tune of 8,000 crores, out of that we expect 25 to 30% will be converted to revenue. So revenue conversion will be of these two parts. One is the order book which is in hand, and what will be booked during that year. So these two put together will constitute the revenue, and this is excluding Reliance and IG.
Okay. Thank you. And if I could push just one more question. So about your margins, I see that your EBITDA margin is 5% and the net margin is a little bit lower. So compared to the smaller EPC players who show net margins of over 10%, like do you have plans to improve the margin? I clearly understand this is a very good turnaround considering the losses that you have posted previously, but I would like to understand about the future margins.
So as we stated, we will continue to maintain our historic margins, and with the economies of scale and portfolio going up, definitely there will be improvement on the margins. But I will not like to comment on other EPC players, but we have in this market for long, and we have consistently delivered margins, which will continue to do so in the domestic market revenues.
Okay, thank you so much.
Thank you. The next question is from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello. Hi, sir. Am I audible?
Yes, sir. Please go ahead.
Yeah. Sir, what have you paid any debt in this quarter?
We have paid off. You're talking of debt repayment?
Yeah.
Yeah. So whatever was the debt repayment which was scheduled, which was a commercial paper of 100 crores and a term debt of 25 crores, has been paid on time.
You mean to 125 crores of debt has been paid?
Yes. But that was anyway earmarked with fixed deposits, so you will not see a change in the net debt situation.
Okay. And sir, any guidance for overheads for this year? What will be the overheads for this year?
No, we do not. We will keep it consistent. We don't want to give any kind of guidance at this stage on the overheads.
Okay. No worries. Thank you so much.
Thank you. The next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hello. Hi. I'm audible?
Yes, sir. Please go ahead.
Yes, sir. Hi, sir. Just one question on the EBITDA margins. What can we expect going forward for FY25?
Sir, may I request you to speak up, so your audio is very low.
Just a moment. Hello. Is it better?
Yes, sir. Please go ahead.
Yes. Hi. Just one question on the EBITDA margins. Now, what can one expect going ahead for FY25? And it would be really helpful if you could, explain the improvement quarter on quarter as well. How does company see the margins shape up?
So as we have given a revenue guidance and a gross margin guidance, we are not presently in a position to give an EBITDA guidance because we wouldn't want to do so. You can fairly well calculate it. How it flows quarter on quarter will depend on the pace of execution of various projects across every quarter.
Okay. So please, can you repeat the gross margin guidance? I joined the call late. Thank you very much.
Yeah, the gross margin we said would be consistent with the gross margins which we have reported.
For the entire year?
Year and quarter are fairly consistent.
Okay. All right. Thank you and all the best.
Thank you. The next question is from the line of Danish Mistry from Investor First Advisors. Please go ahead.
Hi, congratulations for a good set of results. I just had one question, was regarding our working capital. If you want to see the console working capital, there's been a great improvement. Just want to understand, there's been an increase in the trade payables bit versus last year. So is this something that we can expect as an ongoing basis, or is it just project ended kind of balance sheet year kind of number? That's it from my end. Thank you.
Sure. Thank you. You will see that a lot of the revenues have happened in this quarter, and especially in the month of March, leading to an increase in trade payables. Similarly, there is an increase in trade receivables plus unbilled, which lies in my other financial assets. If you see the two of them in combination, it is consistent with what is there even in the previous year. So the reason for whilst one is shown on the face and the other is shown in a schedule in the receivable side, the trade payable shows up straight on the face, which is why it looks inconsistent, but which is not the case.
Okay. All right. Thank you so much. Thank you, Father. Thank you.
Thank you. The next question is from the line of Parth Agrawal from Bastion Research. Please go ahead.
Hi. Thank you for the opportunity, and congratulations on good set of numbers. My one question is on, so what has been your historical order book win ratio? If you can highlight that part.
So, historic win ratio in the domestic market, what we have seen when the trend in last few quarters, is market share is 30% and our PSU strike rate is close to 50%. So we have been very, very successful in wherever the big PSU tenders we have participated, more than 50%, and overall our addressable market share is 30%.
So, when you are bidding for 30 gigawatts of project and assuming 1.5 crores per megawatt, it comes to around the size of 60,000 crores of order books that you're bidding for. So don't you think probably the order book win ratio should be close to, rather than 8,000 crores, should be up to the 10, 12,000 crores?
Could you repeat your question again?
So if you are bidding for 30 gigawatts of projects this year, right, and with a win ratio of
Sorry to interrupt, sir, your audio is not clear. May I request you to speak up, sir?
Is it better now?
Yes, sir. Please go ahead.
Okay. I'm saying that with the 30 gigawatts of order book bid that you are going to do this year in FY25, and with 30% of success ratio or win ratio that you have, so don't you think probably your 8,000 crore of order inflow should be more than 12,000, 15,000 odd crores?
So see, the majority of the domestic market is BOS, which is 1 crore per megawatt, approximately with fixed steel, and 1.3 crores per megawatt with trackers. So this is the dominant market with some tenders coming out with modules. So with respect to that, we have estimated a number and given out to you, which number can significantly improve as we go along the year. But we kept the guidance to 8,000 crore at this point of time.
Okay, thank you. That's helpful. And just last question from my side. So, pre-COVID, your gross margins used to be 14-15% level, and as you guided that you are expecting around 10-11%, which you currently have clocked this quarter and this year. So, any reason why you're expecting your gross margins to be lower than what historically it has been?
Our gross margins have always been historically in the 10-11% range. 14% has been when we have gone opportunistically into certain geographies where we have made high margins. However, if you go consistently year from year, it has always been in the range of 10-11% and not 14.
Okay. Thank you. That's all from my side, and best of luck for the future quarters.
Before the next question comes up, since this is being asked repeatedly, I thought I'll just reiterate the whole thing. We do not have any equity fund planned for future. And just again, to put out the revenue expectation, out of the UOV of 8,000 crores, we expect to close 6,000 to 7,000 crores. And out of the new order inflow of 8,000 crores, coincidentally both are 8,000. The second 8,000 is without Reliance and without Nigeria. We expect to close between 25 to 30% of that. Hence, you can say out of the UOV and book and bill, the revenue right now that we are expecting is between 8 to 9,000 crores, other than Reliance, other than Nigeria. I just thought I will summarize this because this is being asked repeatedly. Thank you.
Thank you. Ladies and gentlemen, in the interest of time and fairness to all participants, please limit your questions to one or two per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. Our next question is from the line of Jaya from Niveshaay Investment Advisory. Please go ahead.
Hello, am I audible?
Yes, sir. Please go ahead.
So I had this question on the EBITDA margin side. So what is the EBITDA margins that we earned in this quarter in the international markets?
We don't give EBITDA by region. The overall EBITDA is about 54 crores, which is what has been earned for the year and which is fairly similar to what we have got in the quarter as well.
Correct, sir. I also wanted to understand on the fixed cost. So let's say our revenue increases by a certain percentage. What are we expecting that number to be in terms of employee cost or other expenses? Can there be a multiplier to it?
Our employee costs and other costs are not related to the increase in revenue. And we are not expecting the overheads to go up significantly from what has already been given for the current financial year.
Correct, sir. I also had this doubt related to the ALMM. There were problems of unavailability of good quality modules when ALMM was initially introduced, and that is why it was deferred. Do you expect to face any similar problems going ahead?
Could you repeat again, please?
So when the ALMM was introduced initially, there were some issues related to quality of the ALMM modules. So are we expecting any similar kind of situations in future?
No, I don't expect any such question. I already answered this question. So with respect to ALMM, because all the big industrial houses and fairly reputed manufacturers are coming into market and their modules are being produced with latest technology, so I don't have any concern on availability or quality of the modules, and it will not impact project execution going forward. So there are no concerns on that front at all.
Correct, sir. Also, sir,
sorry to interrupt, Mr. Day. May we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Thank you. Our next question is from the line of Aryan Mehta from Mehta Investments. Please go ahead.
Hi, sir. Congratulations on the great quarter. Looking at the balance sheet, the other current liabilities have nearly doubled year over year. What is the reason for this? Thank you.
Mr. Mehta, I'll just answer your question shortly. If you have any other question, you can ask in the interim.
No more questions.
So I'll take the next question and I will give you an answer shortly.
This is the only question I have.
Okay, sir. Mr. Mehta, the management will answer your question. We move to the next question. The next question is from the line of Raj Rishi from DCPL. Please go ahead.
Yeah, hi. There was a report which suggested that annual opportunity for solar...
So may we request you to use your handset, sir?
I'm using my handset only. Hello.
Yes, sir. May we request you to speak a little louder, sir? Thank you.
There was a report recently that suggested that the Indian EPC solar opportunity from now till 2032 is around 65,000 crore per annum. Do you agree with this kind of report? This kind of opportunity?
So opportunity, it can be like the valuations are arrived at considering various values. So what we project is the BOS value for the project for this market. But I don't know on what basis this number has been calculated, but we expect market to be significant in the range of 25 gigawatt going 15 to 20% annually. So from that basis, we can calculate the number. So I don't know whether that EPC has been calculated on the turnkey basis or the whole project cost. So that is very difficult to comment on that particular number.
So, sir, like your assessment of your opportunity, the market addressable from your